Welcome back, everybody. This is Josh Selway bringing you another episode of the Schaefer Stock Market Podcast. I am an editor at Schaefer's Investment Research. If you're new here, we do these podcasts once a week, giving you quick breakdowns on what we're looking at in the stock market, what we're reading in the financial news, any other observations we are making here at Schaefer's Investment Research. This week has been another wild week on Wall Street. Lots of headlines. Of course, we have everything that's going on in Washington, D.C. with the impeachment inquiry and more headlines around President Trump. That has led to volatile price action as well because we have these trade talks between the U.S. and China scheduled for next week. But really the focus this week from investors has been on economic data. Mainly earlier in the week, we had this manufacturing reading, which was way below expectations, igniting fears of recession, a potential recession once again. And then we also got a dim reading on the non-manufacturing ISM index for just showing what's going on in the services sector, and that was weak as well. So downbeat data coming out of the U.S. right now. However, that led some investors to start thinking that the chances of a rate cut from the Fed later this month in October are going up dramatically because of this. So that led to some stock buying today. As I speak, the Dow has done a sharp reversal, is now up 122 points on the day. So another week like that where this price action has been moving fast, big moves in both directions, and that could continue next week with these trade talks set to continue between the U.S. and China. And starting on the trade front, I wanted to point out that we just got this news this week that the U.S. is putting tariffs on items coming in from the European Union. Specifically here, there are $7.5 billion worth of European goods that will be hit with tariffs now. And the most notable ones are jetliners, and then we got some Scotch, whiskeys, cheeses, those types of things coming in. And this is because of a World Trade Organization ruling that allowed the U.S. to place these tariffs on European goods. That was part of the deal there because of this ruling, gave the U.S. the opportunity to do that, and they decided to do that instead of negotiate a broader agreement with the European Union. So that's interesting to note there. This was not just the Trump administration coming out of nowhere with these new tariffs on European goods. This was a choice they had following this ruling from the WTO. So that may not be a sign of a broader trade war now with Europe as we've seen with China. But of course, we never know with these types of things. But it was important that people recognize that that was part of this World Trade Organization ruling and not just a big curveball there from the Trump administration. As far as individual stocks go for this week, a few names here that I thought were interesting, especially because they made such big moves. When I was first putting together the outline for this podcast, this part was about GoPro and how the stock was rallying. But as it turns out, it has become a segment about how GoPro stock is selling off because the company just released quarterly results, and the shares today are getting crushed. Checking right now, and they're down 19% on the day. And what was most notable here from GoPro was the company's guidance. They slashed their guidance, and mainly weakness was centered around the new Hero 8 Black cameras, the company noting shipment issues and production delays around that product. And actually earlier in the week, a day or two before the earnings release, we were talking about GoPro because of the interesting call activity that we've been seeing on the stock, and that would have been suggesting that options traders were betting on more upside in GoPro. It's been a volatile stock in the past, maybe lending itself to that type of speculation from options traders betting on big moves, and the shares had been gaining from early September, going from around $4 per share up to $5.70 earlier this month. So a big move there, but after earnings back down near that $4 mark after, again, that huge move today. So anyone that bought call options on GoPro, not happy, to say the least, I would be guessing, considering the results we're seeing today. And this actually leaves GoPro fairly close to last month's all-time low, around $3.60 per share. If you recall, a few years ago, GoPro goes public, and the shares eventually got up, if I recall properly, around $70 per share, above $70. So it's been quite the ride for GoPro. Recent years obviously struggling mightily. Again, a big favorite among options traders, considering its tendency to make those big moves. But for anyone holding the stock, it's been quite painful. Another stock that was getting absolutely slaughtered this week was TD Ameritrade. So we had Charles Schwab come out and say, hey, zero commissions on stocks, ETFs, and options listed on the U.S. and Canadian exchanges. So they're just bringing those down to zero. That stock gets hit. And then, so what does TD Ameritrade do right after the close? They say, hey, we have to go to zero as well. So they follow Charles Schwab's lead. They go to zero commissions, and now the entire sector is getting crushed. TD Ameritrade alone has lost almost 30% in just the past couple days, going from around $46 per share down right now to $32.85 per share. So a huge, huge blow to TD Ameritrade stock. And that sparked a lot of wagering on the options side of things. Right away, the day that this sell-off started, we were noting that there was heavy put activity on TD Ameritrade, specifically at the October 35 put. So anyone who bought that put, that is now in the money. A nice purchase there, depending on what they paid for it. If volatility expectations weren't too ramped up there, those traders may have made a nice profit. A lot of analysts coming in and cutting their expectations on these stocks, most notably Wells Fargo moves TD Ameritrade and the other sector peers down to underperform from outperform. So they were essentially saying to buy these stocks. Now they're essentially saying to sell these stocks. A big move there from Wells Fargo in reaction to the zero commission wars. And even today, we're noting more options trading on TD Ameritrade. Option traders continue to come in. We had actually during this week, we saw options activity peak, hit annual highs on TD Ameritrade. Interesting, in today's trading, one of the more popular options is the weekly 10-4 33.50 strike call. But it looks like traders may be selling to open these positions, which would mean they'd be betting on this strike, holding as technical resistance through the end of this week, trying to bet that TD Ameritrade will hold below that level by the close this Friday. Another name that we just covered that I wanted to bring up here is Zoetis, ticker ZTS. That is an animal drug maker that if you have a pet and you brought them to the vet, there's a good chance that you used this company's products before and their medications. Specifically, I have a black lab with severe allergies, and when I took her to the vet, they suggested Apoquel, which is made by Zoetis. And once you know it, not only is this going through Zoetis, but they also have a rewards program to get money back on their drugs, which obviously that gets a lot of information for them about their customer, email addresses, all types of things. And that data is key, of course, in this new economy. But even more telling then is the stock. If you look at a stock chart for Zoetis, it has been a huge outperformer in recent years. Just in the past 2 years, in fact, the shares have essentially doubled in value, going from around in the mid 60s or so up to right now $124 per share. So that stock has been lights out. People are willing to spend more on their pets. And obviously this medication, I know Apoquel is definitely not cheap, just for even 1 month's worth of the pill or the prescription is it's not cheap. So Zoetis, that may explain why the stock has been lights out. And as we wrote over on Schaefer'sResearch.com, this could be a good time to get in. The shares just pulled back slightly to the 40-day moving average. We ran some studies on that, and that has proven to be a good entry point over the past year. And options traders have been all over Zoetis. The major options exchanges show heavy interest in call buying. In fact, there's been more than 8 long calls crossing for every put in just the past 2 weeks. So traders are betting on more upside for Zoetis, and the momentum is definitely to the upside with this stock. If you believe people are going to continue to spend a lot of money on their pets, this may be a name to consider. Or if you've gone to the vet yourself and received a $200 bill or what have you, Zoetis could be a big beneficiary of those bills. So maybe something to consider from that angle. Speaking of long-term winners, I wanted to bring up Microsoft here just because they had a hardware event this week, their annual hardware event, and it really didn't get that much publicity. And in that event, they actually unveiled a foldable smartphone that actually looked kind of interesting and useful in a way I'm not really sure how it would actually be useful, but it did look cool. So I just wanted to call attention to that and the fact that Microsoft has continued to be a strong stock this year, pushing that $136 area. Actually, the day of that event, Microsoft stock pulled back kind of sharply, but today it's reversing course, trying to get right back into its longer-term uptrend. And we noted over on the site how that pullback found support at the 120-day moving average, which is a moving average that our numbers show has been very bullish for Microsoft in the past. So maybe not surprised that the shares are reversing higher now from that pullback. Though options traders today are looking at the October 132 put where they may be selling positions, betting on Microsoft holding above that price level in the weeks ahead. Speaking of the weeks ahead, one name historically that you may have wanted to avoid in October has been Advanced Micro Devices, ticker AMD, one of everybody's favorite tickers. Historically, in the month of October, AMD has averaged a loss of 9.7% with a median return of 13%. It's only been positive during the past decade 4 times during the month. So October historically has been a terrible month for AMD. And what's interesting about that, this comes at a time where some chip makers have been starting to at least stabilize some. NVIDIA, I noted today over on Twitter for Schaefer's how NVIDIA's trying to reclaim that $180 price target, and options traders are predicting more upside for NVIDIA as well. But AMD right now may be a name that could be in for some weakness in the short term if these seasonal headwinds come to fruition once again. And like NVIDIA, though, options traders have been betting bullishly on AMD, as we wrote about over on the website. Speaking of options trading, I like to call attention to these articles that we put up on the site where we recap some of our winning trades. And the one we just posted today actually was on Archer Daniels Midland, ticker ADM. We were able to actually get subscribers a profitable options trade in just under 3 days with that, with a put option there on ADM. So if you want to see how that trade unfolded, go check out that article over on the site. ADM options bears banked impressive profit in just under 3 days. So go check that out on the website if you're interested to see how we approach some options trades and how we pick names that we want to target. I wanted to end this with a quick discussion here about sports betting because of some things that have happened overseas. Of course, we have here in the U.S., sports betting is now becoming legalized across the country in different areas, steadily gaining momentum there. But overseas, we had Flutter Entertainment this past week, which is the owner of FanDuel. FanDuel is the daily fantasy sports site, DraftKings rival. That is owned, again, by Flutter Entertainment, which is traded in London. That company agreed to buy PokerStars owner Stars Group, which is ticker TSG, and that stock's actually traded on the NASDAQ, last seen trading just above $20 per share after this news this week. So it's interesting here to see some consolidation in that space. According to brokerage firm Jefferies, this allows these companies to now control 40% of the market share, the betting market share in the UK, which is obviously a huge market for gambling. So just wanted to call this out as it becomes more legal in the U.S. We could see more moves like this, or it's at least worth monitoring where these companies are positioning themselves and how they're positioning themselves. And back in the U.S., actually, we just got news that in Capital One Arena in Washington, D.C., where the Washington Wizards play and the Capitals play, they're opening up a sports betting venue inside there using the sports betting operations from William Hill in the U.S. and Monumental Sports Entertainment. So this will be the first of its kind here, according to the CNBC article, for a sports arena in the U.S. So they're trying to get people to bet while they're in the stadiums. So it's interesting to see that move going forward. We'll have to see if other stadiums follow suit and move forward with similar projects. But on that note, I'm going to end it right here for this episode of the Schaefer Stock Market Podcast. Thank you so much to everyone who's been listening. Subscribe and review wherever you are listening. And yeah, you can check out Schaefer's over on Twitter, Facebook, StockTwits, Instagram, all those different places if you want to keep tabs of what we're up to over at Schaefer's Investment Research, or just go straight to schaefersresearch.com and read about what we're writing about throughout the trading day. But until next time, folks, thanks again for listening. I will talk to you guys again next week.